Hello, ladies and gentlemen. Welcome to Cash Crafting Crew, your favorite finance YouTube channel. Today, 7 rules from Warren Buffett to invest this 2024. But before starting the video, remember that this is not a purchase or investment recommendation or financial advice. Everyone should do their own study and analysis and not invest money that you cannot afford to lose. Having said that, we start with the video. Have you ever wondered what makes Warren Buffett, one of the most successful investors of all time, tick? The man, the myth, the legend, Warren Buffett, a name synonymous with success in the investment world. The Oracle of Omaha, as he's fondly known, has amassed a fortune running into billions, making him one of the wealthiest individuals on the planet. But what's the secret sauce? What does he know that we don't? What strategies does he employ that have led to such unparalleled success? The intrigue around Buffett's investment strategies is as vast as his fortune. Is it his uncanny ability to spot a diamond in the rough? Or is it his unwavering patience to wait for the perfect opportunity? From turning a struggling textile mill into a multi-billion-dollar conglomerate to betting big on industries considered unfashionable, Buffett's investment journey has been nothing short of extraordinary. Let's unravel the mystery behind Warren Buffett's billion-dollar success. Scene script. Rule number 1, never lose money. But what does it mean? Well, let's delve into Warren Buffett's wisdom. This rule doesn't mean that every investment you make should churn out profits. That's impossible. Even the Oracle of Omaha himself has had his share of losses. What Buffett emphasizes in this rule is the importance of minimizing losses over maximizing gains. Think of it this way. When you lose half of your investment, you need 100% return just to break even. That's a steep hill to climb. Instead, focus on investments that have a lower risk of substantial losses. It's not about being risk-averse, but about being loss-averse. Buffett's strategy is to invest in businesses he understands and believes in. He doesn't gamble on the hot stock of the day. He invests in solid businesses with a track record of profitability. Yes, these might not always give you the highest returns, but they are less likely to make you lose money. It's also worth noting that this rule is closely tied to Buffett's long-term investment philosophy. He's not interested in quick profits. He's looking for stable, long-term growth because he knows that's where real wealth is built. So when you're thinking about where to put your money, remember Buffett's rule number 1. It's not about making the most money. It's about not losing what you've already earned. Remember, as Buffett says, rule no 1 is never lose money. Rule no 2 is never forget rule number 1. Rule number 2, don't forget rule number 1. Sounds redundant, right? Well, let's delve a little deeper. Warren Buffett's first rule, never lose money, isn't just a catchy phrase. It's the cornerstone of his investment philosophy, a guiding light that has steered him through the choppy waters of the financial market. It's not about being overly cautious, but about understanding the value of your hard-earned capital. It's about making informed decisions, weighing the risks, and always keeping an eye on the bottom line. It's about the power of compound interest, and how even small losses can have a big impact over time. It's about patience, discipline, and the courage to say no when the numbers don't add up. So when Buffett says, don't forget rule number 1, he's not just reminding us to be careful. He's telling us to respect our money, to treat each investment as a sacred trust. The first rule isn't just a guideline, but a principle to live by in the world of investing. Moving on to rule number 3, high returns with low risk. This principle lays at the heart of Warren Buffett's investment strategy. The Oracle of Omaha, as he's often called, is known for his knack of spotting potential investments that promise substantial returns but with minimal risk involved. But how does he do it? Well, it's all about understanding and analyzing the business. Buffett dives deep into the company's financials, its market position, and its potential for growth. He looks for businesses with a competitive advantage, or a moat as he calls it, that protects them from competition and allows them to generate consistent profits over time. He also values the leadership and the corporate governance of the company. In short, Buffett doesn't gamble, he makes calculated decisions. To summarize, always aim for investments that promise high returns with the least amount of risk. Buffett's fourth rule is all about patience. Think long-term. This is a principle that has guided some of the most successful investors in history. It's not about making a quick buck, but rather building wealth over time. You see, the stock market is not a sprint, but a marathon. The magic of compound interest, the eighth wonder of the world as Einstein famously called it, only works when you give it time. The longer you allow your investments to grow, the greater the exponential increase in your wealth. It's like planting a tree. You don't expect it to bear fruit immediately, do you? No, you nurture it, you water it, and over time it grows, eventually bearing fruit. In the world of investing, patience is indeed a virtue. It's about investing in solid businesses with strong fundamentals and then waiting, letting the business do what it does best over time. In Buffett's words, if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. Rule number 5, buy businesses, not stocks. Now, this might sound a bit confusing at first, but let's delve into it. When Warren Buffett looks at an investment, he doesn't see a stock symbol or a price chart. No, he sees an entire business, a whole machine working to create value. Picture this, you're at a market and you spot an apple stand. You don't just buy an apple because it's shiny. You consider the quality of all the apples, the reputation of the stand, and the price you're paying. That's precisely how Buffett approaches investing. He doesn't just buy a stock because it's popular or because it's been skyrocketing. He looks at the entire business behind the stock. He considers its financial health, the competence of its management, its competitive advantages, and whether its products or services are likely to remain in demand in the future. He wants to invest in businesses that are durable, that can withstand economic ups and downs, and that are priced reasonably. You see, Buffett isn't just buying a stock. He's buying a share of a business. He becomes a part owner of that business, so he needs to believe in its long-term prospects. He needs to feel confident that the business will continue to generate profits and grow in value over time. So the next time you're considering an investment, think like Buffett. Don't just look at the stock, look at the business behind it. Remember, you're buying a piece of a business, not just a stock code. Buffett's 6th rule, don't try to time the market. Let's unwrap this. The market, by nature, is unpredictable. Trying to perfectly time your buying and selling of stocks is a bit like trying to predict the weather a month in advance. It's not impossible, but it's highly unlikely, and the odds are definitely not in your favor. What happens when we try to time the market? We may end up making rash decisions based on short-term trends, losing sight of our long-term investment goals. This approach is often driven by fear or greed, and both are poor advisors when it comes to investing. Instead, the Oracle of Omaha advocates for consistency in investing. Buffett himself has been known to hold on to his investments for decades. His strategy is to invest in solid, high-quality businesses and then wait, and wait, and wait some more. This is not a get-rich-quick scheme. It's a get-rich-surely scheme. Why does this work? The market tends to rise over the long term, and consistent investing allows you to take advantage of this trend. It's a strategy built on patience and resilience, two traits that are far more controllable than the whims of the stock market. So, the next time you're tempted to try and outsmart the market, remember, the market is not a beast to be tamed. It's a wave to be ridden. And the best way to ride that wave? Consistency. As Buffett puts it, the stock market is a device for transferring money from the impatient to the patient. Finally, rule number 7, be fearful when others are greedy. This principle may seem counterintuitive, but it's a cornerstone of Warren Buffett's investment strategy. Let's break it down. When the market is buzzing and everyone is buying up stocks like there's no tomorrow, that's when you should start to worry. Why? Because market sentiment often leads to overvaluation. People get caught up in the hype, start to jump on the bandwagon, and suddenly prices skyrocket, detached from the actual value of the businesses they represent. This is what we call a bubble. And as history has shown, bubbles always burst sooner or later. But where does fear come into play? Well, fear is a powerful motivator. It forces you to double-check your decisions, to evaluate whether you're getting swept up in the mania or making a rational, informed choice. Fear keeps you grounded. It's a reminder that the market isn't always a friendly place, and that fortunes can be lost just as quickly as they're made. So when everyone else is greedily hoarding stocks, be fearful, be cautious. Don't let your decisions be driven by the fear of missing out, but by solid research and sound judgment. And on the flip side, when the market is in turmoil and everyone is selling, that's when you should be greedy. That's when the real bargains are to be found. In conclusion, always be wary when others are greedy and be greedy only when others are fearful. We hope you liked the video. If so, it would help us a lot if you left us a comment, since the YouTube neural network values this very much and thus recommends our videos to more people. Give it a like and activate the bell so that you receive a notification when we upload our next video. So see you soon. Greetings.